Welcome back to the channel. Today I'm looking at 3 stocks that have good potential for a nice bounce back after recently selling off for a big loss. I'm personally looking at leap call options at or in the money, so they have more time to work out in my favor. I'm not a financial advisor. These videos are for entertainment purposes only. First off, let's look at Chegg, ticker CHGG, who they are and why their price has dropped nearly 50% from $62 to $30. Chegg is a leading student-first interconnected learning platform which is on-demand, adaptive, personalized, and backed up by a network of human help. It is a smarter way to student, and it is transforming the way millions of students learn by reconnecting the link between learning and earning through tools and services that support students throughout their educational journey. Our mission is simply to help students save time, save money, and get smarter in order to improve the overall return on educational investment. This is from Forbes.com. Says Chegg's stock plummets 48% as revenue takes a hit from schools reopening. Chegg plunged nearly 50% on Tuesday, wiping billions off its market value after the company's recent earnings showed revenue would continue to take a hit from lower demand as students return to the classroom. Chegg stock is down 48% to around $32 per share on Tuesday, shaving over $4 billion off the company's market value, which stood at more than $9 billion a day earlier. The company on Monday afternoon reported third quarter revenue of $171.9 million, up 12% from a year ago, but slightly below analysis expectation of $174.5 million. While earnings of 20 cents per share were in line with forecasts, Chegg's total subscribers fell to 4.4 million, an unexpected decline from 4.86 million in the previous quarter. Another issue was Chegg's forward guidance. The company warned that fourth quarter results would take a substantial hit among a student slowdown in the educational industry. Chegg highlighted that with fewer enrollments and lighter course loads as students return to school post-pandemic, demand for online education services reset faster than expected. The company is now projecting sales of around $195 million for the fourth quarter, usually a busy time of year with final exams, well below the $241 million expected by Wall Street analysis. In late September, it became clear to us that the educational industry is experiencing a slowdown that we believe is temporary and is a direct result of the pandemic, Chegg's CEO Dan Rosenwig said in a statement. A combination of variants, increased employment opportunities, and compensation along with fatigue have all led to significantly fewer enrollments than expected this semester. He added during the company's earnings call, the post-pandemic impact will affect the current school year, but is not substantial for higher education long term, Rosenwig argued. Chegg's stock more than tripled in 2020 as demand skyrocketed among students learning remotely during the pandemic. Shares of the online education company have fallen significantly from their peak of $110 a share earlier this year. However, the stock is down nearly 60% so far in 2021. Analysis at Morgan Stanley slashed their price target for Chegg share to 53 from 88, warning that the impact of lower demand raises questions about how well the company can bounce back. In addition to our significant negative estimate revisions, the broader uncertainty around the various contributions to the demand headwinds make us more cautious, and we see the stock in a penalty box near term, the analysis note said. Chegg charges $14.95 for what it claims is online student help, but a Forbes investigation earlier this year found that most students use Chegg to cheat on exams, quizzes, and homework. Now the students are back in the classroom. they can't easily use Chegg to cheat. So here we see that November the 1st was at $62. Today it's down to $30.68. Nearly 5 days away from where the stock fell off. It is past the 3-day rule. Before it fell, it was 20% down for the year. The 5-year chart, it's up 362%. Still in line with an uptrend on the 5-year chart. Has a 52-week high of 115.21. It's currently just above the 52-week low of 30.59. And next we'll look at Lightspeed Commerce Incorporated, ticker LSPD. They've gone from $99 to $72.30, nearly a 25% drop. From their investor page, Lightspeed powers business around the world. Our commerce platform transforms and unifies digital and physical operations by enabling multi-channel sales, expansions to new locations, global payments, financial solutions, and connections to supplier networks. Leading global cloud-based omnichannel commerce platform. This is from tipranks.com. Lightspeed posts wider loss in Q2. Shares plunge. Shares of Lightspeed LSPD fell 30% in early trading Thursday after the provider of cloud-based omni-channel commerce reported a wider loss in second quarter than a year ago. Despite a strong increase in revenues, total revenue came in at $133.2 million in 3 months ended September 30th, an increase of 193% from $45.5 million in the prior year quarter. Growth was driven by a combination of strong organic growth and the recent acquisition of New Order, Vend, Upserve, and ShopKeep, which added $62.5 million in revenue. Subscription revenue was $59.4 million, up 132%, while transaction-based revenue was $65 million, up 320%. Gross transaction volume grew 123% year over year to $18.8 billion. Net loss amounted to $59.1 million in Q2 2022 compared to a net loss of $19.5 million in Q2 2021. After adjusting for certain items such as acquisition cost and stock-based compensation, adjusted loss was $11.1 million, negative 0.08 per share in the quarter, compared to an adjusted net loss of $4.6 million or 0.05 per share a year ago. Lightspeed Chief Financial and Operations Officer Brendan Nussi said Lightspeed achieved solid results this quarter on the back of strong GTV growth, an increased payments penetration rate, and growing software adoption. While the rate of global economic recovery is expected to be uneven, overall, our core business drivers remain strong. For the third quarter, the company expects revenue of $140 million to $145 million and adjusted EBITDA loss of approximately $10 million to $12 million. On November 1, CIBC analysis Todd Coupland maintained a buy rating while lowering its price target to 190 from 195. This implies 121.4% upside potential. Overall, the consensus is that LSPD is a moderate buy based on 10 buys, 3 holds, and 1 sell. The average Lightspeed price target of 148.22 implies 72.4% upside potential to current levels. LSPD dropped from 99 to 72.30. Monday will be the third day since the drop. A 1-year chart, they are up 78.87%. It's still in line for a nice continued uptrend. We have a 52-week high of 130, 52-week low of 37.92. And lastly, we'll look at Cortexyme, ticker symbol CRTX. They have recently gone from $57 to $16.90, nearly a 70% drop. Cortexyme is a clinical stage biopharmaceutical company pioneering upstream therapeutics approaches designed to improve the lives of patients diagnosed with Alzheimer's and other degenerative diseases. Cortexyme lead program targets a specific infectious pathogen called P. gingivalis found in the brain and other organs and tied to degeneration and inflammation in humans and animal models. The company's causation evidence for Alzheimer's disease and the mechanism of its novel therapeutic have been independently replicated and confirmed by multiple laboratories around the world, as well as published in peer-reviewed scientific journals. This is an article from investor.com. Cortexyme says there's a caveat and it's missed Alzheimer's test, but shares crash. Cortexyme executives lauded the study that helped narrow the patient pool for its Alzheimer's drug, but investors sent CRTX stock to an all-time low Wednesday. The study missed its primary goal, improved on two measures of cognition for all patients enrolled in the study, but the twice-daily pill did its job in some patients. In some patients whose saliva contained the bacteria P. gingivalis, the drug slowed cognitive decline by 42 to 57%, depending on the dosage. The result is both clinically meaningful and statistically significant, Chief Medical Officer Michael D. told Investor Business Daily. Chris Lowe, Cortexyme's Chief Financial Officer, deemed the results a magical moment for history. In his family, several grandparents and his parents suffered from the disease. This is the disease of the loss of cognition, Lowe told IBD. Having such meaningful data in slowing the progression or loss of cognition is for us a paradigm shift. It gives me literally chills to think about the millions of people around the world who may not have to go through what my family did because of this data set being the catalyst for the future. However, on the stock market today, CRTX plummeted 76% to 1351 in high volume. That puts shares at the lowest ever point. The biotech company tested its Alzheimer's drug, dubbed altozagstat, in 643 patients with mild to moderate forms of the disease. Altozagstat aims to starve the bacteria, rendering it less effective. The drug failed to make a difference in patients who didn't have the P. gingivalis bacteria in their mouth. However, for those whose saliva contained the bacteria, altozagstat slowed cognitive decline by 57% on one measure. A smaller dose led to a 42% slowing of cognitive decline in the same group of patients. The company chief medical officer says a 20 to 30% slower decline would be significant. Chief Executive Casey Lynch says roughly half of Alzheimer's patients have this bacteria in their saliva. That's about 3 million Americans. We know more about Alzheimer's disease today than we did yesterday, and that's a great thing for patients and for research. She said in an interview, "What we did with this study is an incredibly important part of drug development, which is identify the patients that our drug treats." But Credit Suisse CRTX stock analyst Judah Fromer said Cortexyme still has a long road proving its theory that P. gingivalis and bad actors called gingipanes play a role in Alzheimer's disease. A cause link between gingipanes and Alzheimer's disease is yet to be established in our view. He said in a report to clients. Fromer noted Cortexyme could still run additional tests in the patients who did respond. The company will have to select a dose and address elevated liver enzymes. Between 7 to 15% of patients who received the drug experienced asymptomatic increases in liver enzymes. Fromer kept his underperform rating on CRTX stock and cuts his price target to 11 from 14. One measure misses in key group. After receiving Cortexyme for 24 weeks, researchers tested patients' saliva and found reduction in P. gingivalis. Those correlated with better outcomes on 3 out of 4 measures of cognition. But one scale, the Alzheimer's Disease Cooperative Study Daily Living Scale, didn't show an improvement even in P. gingivalis group, Deek said. Cortexyme is researching why that might have occurred. Historically, improvement in cognition doesn't always lead to immediate functional benefits, he said. Further, the pandemic might have impacted that part of the study. Things like going to the grocery store or driving to a doctor's appointment. Those are questions on the test, he said. No one was doing any of that during the lockdown. The 42 to 57% slowing of cognitive decline showed up on the Alzheimer's Disease Assessment Scale, cognitive subscale. The 70-point scale measures patients' ability to complete 11 tasks. In comparison, Biogen's label for its approved Alzheimer's drug, Adulam, shows a 27% slowing of cognitive decline on that same measure. Cortexyme's shares were on fire earlier this fall, but have since toppled. After hitting a high point at 121.98 on August 10th, CRTX stock has lost more than half of its value. As of the close on Monday, shares are now below the 50-day moving average. The move on Wednesday also pushed CRTX to cross its 200-day line. Last week, Cortexyme did a little bounce back of 28.52% from its low of 1351, but still way down from 59.27. Cortexyme has a 52-week high of 121.98, a 52-week low of 12.41. You can see on the yearly, the stock was doing pretty well in hopes of the outcome of this test. It's still not out of the question that they get a FDA approval on the 11th of this month if they're doing a presentation of this. Let me know in the comment section below which one of these stocks you think has the most potential, and we'll see you next time. Thank you.